Hi, have you ever felt lost in sea, stuck off options? Unsure which company deserves your hard earned money? You're not alone. But today, if I told you that there's a way to navigate this maze with confidence. Welcome to Value Focused. Today, we are demystifying the art of researching a company before you invest. Let's turn that uncertainty into informed decision making. See, first of all, you should understand the business. Imagine you are considering investing in a small bakery. First, you would definitely want to know what products they bake, who buys them, and what makes their bread special. Similarly, start by understanding company's product and their services, their target market, and what sets them apart from the competitors. For example, Nestle. Now, Nestle has their key products like Cerelac, Nescafe, and Maggi. You should understand who are their target markets and what they actually categorize their products into. Secondly, study the financial health of a company. Think of a company's financial statements as its health report. Key areas to focus to include is revenue, how the company generates, the profit trends over the past 5 and 10 years. Are they even growing over time or no? Consider the debt levels. Is the company drowning in debt, or is it managing effectively and the company is going zero debt? Understand the cash flows. Does the company generate enough cash to sustain the operations even in worst scenarios? For instance, if a company is consistently increasing its profits and maintains low debt, it's like a well-nourished athlete ready for a marathon, and you should invest in such similar companies. Analyze the management team, and even the best business model can falter under poor leadership that we have been observing. So many companies globally have drowned. Research the background of key executives. This is very important. This is what I do always. It is a very important thing, and what not many investors follow this. Have they successfully led companies before? What changes have they bought? Do they have a track record of integrity? That is a must. A trustworthy, experienced team often steers the company towards the growth. After that, evaluate the industry's landscape. Consider the company's position within the same industry. Is the industry expanding? Who are the main competitors? For example, investing in a tech company during a digital revolution might offer more potential than a declining industry. Finally, assess the risk and the opportunities. See, every investment carries some amount of risk. Identify potential challenges the company might face, like regulatory challenges, market saturation. Conversely, look for opportunities such as emerging markets or innovative products that the company could actually include to propel good amount of growth. Check valuation metrics. Determine if the company's stock is priced fairly. Tools like P/E ratio, can tell you something more about the company. A lower P/E might actually indicate that the stock is undervalued, but always compare with the industry peers for the context. I personally see high PE as a good sign. For me, it is like many people are ready to invest in that company with high PE as well, because might be the company plays a monopoly as well. After all, seek out independent reviews as well. Consult analyst reports, news articles, expert opinions. Diverse perspectives can provide deeper insights and highlight aspects you actually might have overlooked. Reflect on your investment goals. Align the potential investments with your financial objectives. Are you seeking short-term gain or a long-term growth? Ensure the company's profile matches your investment horizon as well, and the risk tolerance. Research transforms investments from a gamble into a strategic decision. By following these steps, you are not just buying stocks, you are building a future. Found this guide helpful? Subscribe to Value Focused for more insights, and let's navigate the investment world together. Remember, informed investing is the key to financial empowerment. See you in the next one. Thank you for watching this video.